Welcome back, everyone, to another Capital Conversation. I'm Colin Day, Certified Financial Planner Professional. With me again, John Biedenstein. John, how are you today?
I'm just happy to be here.
You're happy to be here. Well, that's
It's a beautiful day in St. Louis again. The last time I did this, it was a beautiful day in St. Louis.
We will have you on. We will have you on more often. Is what I think you're asking for. We are always looking for podcast fodder, and guests like yourself, who I have to drag into here at least once a month.
I'm glad I wore the company logo, but
yeah, actually, another podcast person that we had on, Ryan, he was also wearing his vest. So I'm the one that is not a company shill today. In any case, for those of you that are joining us audioly only, don't worry, you don't need to see what we're wearing today because we have a very important topic to talk about. John, are you aware of something kind of big that's going to happen in the United States in about a week's time?
Well, when I turn on the TV, it reminds me that there's going to be an election.
Ah, yes. I hope you were going to answer
when
that.
When I turn on the radio, there's going to be an election.
Mm-hmm.
When I drive around, you don't see the signs as much anymore, the big signs, but you do see the yard signs.
Yeah, certainly yard signs, at least in our neighborhood. But yeah, so, if you've been a longtime listener of the podcast or watching us on YouTube, which if you aren't subscribed to us on YouTube, please do so. You can find us at Correct Capital online. When it comes to having a conversation about something related to the election, you might have been aware that we talked about this not too long ago. We had a podcast where we talked about election cycles, why they matter or they don't matter in regards to investment performance and things like that. What we wanted to focus on was maybe on a twist or variation on that, which is talking maybe around the concerns of a particular candidate winning over another one or vice versa. Because depending on what your political views are, which we're definitely not going to get into today, John, I know
we are not.
I already know who you're going to vote for. No, I don't. But when it comes to making a decision, everybody has fear of the other side and what they will do, what the rhetoric is now. And I think it's kind of interesting because you found a piece that talks a little bit about that, some of the fear that came with a certain candidate winning the presidential election, and what the actual results were for 8 years later. Correct. So what did you find out, John?
So one of our investment partners, the Hartford, has issued a recent what they call client conversations, and the title is "The Next President is Unlikely to Sink the Economy or the Stock Market." And they go through a list of the presidents since Ronald Reagan all the way up to our current president, President Biden. And you hear some of the terms that people are concerned about. For example, some of the concerns back before Barack Obama was elected was that this was in 2008. He's inexperienced. We need a stimulus bill to fix certain things, those type of things. So those were happening before his, double term, 8-year term happened. And when his 8-year term happened, the gross domestic product production increased by 1.7%. The S&P 500 went up about 15% over that time period. So it's always what you look ahead to, but if you look in the rearview mirror, that's where I think partners like Hartford really lay it out to say, you can think about it, you can worry about it, but historical trends have indicated that all these things happen, but the U.S. economy has a way of being resilient and kind of finding a way to grow, even through some difficult times.
Yeah, absolutely. And just taking a look, because like you said, this is going all the way back to 1980 in this case. We're talking about, like, more recently, President Trump, who's running for re-election, of course. Well, with someone like him, the rhetoric before he was elected was that never held political office before. He doesn't speak or he acts like a president that would be pretty common in terms of speech and mannerisms. We've got the trade war with China will damage the U.S. economy. But by the end of his 4-year term, the gross domestic product growth was 1.4, and the S&P 500 index, tracking big U.S. companies, was up 16%. And then you've got President Biden now. His critics were saying that too old. We've got a career politician that's running for president, and maybe the feeling that he's more of a vice president than he would be a presidential candidate. Well, average U.S. gross domestic product growth 3.3% as of the time of this particular document, and the rate of return on the S&P 500 was annualized at 13.1. So it is to say, the stock market and the economy seem to be fairly resilient, regardless of who is in office. I think that's pretty fair to say.
That is fair to say. And we're talking about a piece from American Funds today, from Hartford today. I believe when we chatted about this a month or so ago, it was an American Funds piece that talked about. It's really the same message. And, I'm on Facebook, I'm on Twitter. I'd still like to call it Twitter than X because it's easier for me. But you see these posts all the time that say this or that, and, this is going to happen or that's going to happen, and this is what this party's done and that's what this party's done. The reality is it's not all correct. I don't know who's creating the information, but you look at these type of things where they're accurate information being compiled and reported on. And this is what we've seen. If you've been an investor, I hate to say, but I'm an investor going back to the Ronald Reagan election and going forward. And candidly, we've seen bumps. We've seen things go down, but the American economy has resilience that we always seem to get back on our foot, even through the tough times that we've had with the high inflation. Again, it's coming down right now. I think it's at 2.6% now. So those type of things are all, we have a way of fixing things.
Yeah. And of course, this is a very narrow view in terms of the political decisions that voters will make at the beginning of November this year. What, of course, this doesn't answer for are any of the other topics of conversation in regards to why you vote a particular party or not. So when it comes to the investment side of things, your financial advisor is likely telling you the same thing. We have a long-term view here. These presidents only last 4 to 8 years. There's reasons for that. And if you think about it from that perspective, if you are nearing retirement, and let's say you're 60 years old listening to this or watching this, well, if you're 60 years old, we anticipate you living in retirement for another 30-ish years. I don't know, what cryogenics might be available for us at that time, but you might be around for a lot longer than these presidential cycles. You might be surviving through multiple presidential cycles beyond just the next couple of years as you approach retirement. If you're listening to this and you're in your 20s, well, hey, sorry, get used to this. This is what life is when you become an adult, is that you have to focus on the fact that these cycles happen for all intents and purposes every 2 years, because we're going through House reps all the time. But the idea here is that there is always going to be rhetoric, there's always going to be critics that are going to say one thing, and at least from this particular perspective. Again, there are many other reasons why you're going to vote for a particular political candidate. This one might not be the reason that you're choosing it. It's not the cake, it's maybe the cherry on top of the cake that has 8 tiers and, those flowers and stuff like that. Is this a terrible metaphor, John? I think
But the reality is, we don't think you're going to sink, the next president, whoever it might be, is going to sink the economy. And as Colin mentioned, again, focusing on retirees, focusing on folks that are soon to retire. It's more important that you manage it for the future. Don't manage your money that you're all gonna, if something happens, it all goes away in 2025 or 2026. Historically, that doesn't happen. Again, you make adjustments to it. Again, even if you're nearing retirement, you might not be withdrawing or using these funds for 5, 10, maybe 15 years. So you want to be as aggressive as you can, again, with the level of risk that you're comfortable with. And we can help to tailor your portfolios, whether within a qualified plan or within an IRA, to tailor it to what you're comfortable with. So having an open dialogue to say, hey, I might have enough, or maybe I just got I think I have enough, but I need to make sure I keep up with inflation. Well, again, we can tailor the portfolio to make sure that you're successful in retirement.
Yeah, and maybe we'll close with this, that when it comes to short-term decisions, they generally don't work out in the long term. So we still get calls from clients, and I expect to get more in the coming weeks, or in this case, in the week leading up to the election, and certainly the days after, depending on what your political leanings are, we will receive phone calls of people asking to do one thing or the other. I'm either going all in, or more commonly, I'm going all out.
Yes.
And it's because of whoever just won the election or who is perceived to will be winning the election in the days coming up to it. So when it comes to those short-term decisions, you might be saying, Colin, I think the market's going to implode if this person is elected. Well, you might be right in the short term in terms of market, reacting to the fact that somebody got elected. But over long periods of time, I hope what you've gotten from this communication is that over longer periods, because that's what we worry about, not the short term, you're more likely to be wrong than right. So if you have questions for us, feel free to send us a note, provide us a comment, and we'll be happy to provide you with our 2 cents, or we'll encourage you to schedule a call so we can have a conversation with you.
Yeah. So the main conversation here is don't worry about it, but the most important thing is go out and vote.
Yeah, absolutely. Thank you so much for your time today, John. I appreciate you joining us again.
Thank you.
And thank you all for joining us on another Capital Conversation. Until next time, have a great day.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. As always, please remember, investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Correct Capital Wealth Management is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Correct Capital Wealth Management and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Correct Capital Wealth Management unless a client service agreement is in place.